Okay, well, hey, thanks for having me. Yeah, as mentioned, I'm Chris Donaldson. I'm the executive chairman of TinOne Resources, relatively new company. Been around for about a year, and we're listed on TSX Venture under TORC and the OTCQB under TORCF. Yeah, today I'm going to outline the tin market and talk about why we think it's a pretty compelling time to be in the tin space. I think the setup right now is ideal for a tin investment. Of course, I'm biased with that. I'll outline our projects and also talk a little bit about the team that we've assembled and hopefully give you some confidence that we'll execute on our plans. I already made some forward-looking statements. So if you are thinking of making an investment, please read this beforehand. So TinOne Resources, we've got a basket of primarily tin projects in Australia, specifically in Tasmania, which is a state just to the south of the mainland, and specifically actually in northeast Tasmania. Tasmania itself is a historic tin producing state, but the projects that we have basically stopped advancing in the 80s when the tin price fell off a cliff, and so now we've picked them up. One has a historic resource on it, others are past producing assets. We love the area. Of course, you're hearing a narrative of getting critical minerals from good jurisdictions. Certainly Australia fits that build. We've got a pretty significant position there, and that covers 5 of the 7 tin occurrences in northeast Tasmania. And as we'll talk about the supply demand fundamentals are certainly positive, looking forward for the next decade and beyond. We're backed by a group called Inventa Capital, which I'll talk about, which I think we're one of 14 companies under that umbrella. So a little shot at the snapshot of the company here. We raised a couple $1 million in the summer, so we still have over 2 million of that left. Our share price has been absolutely hammered over the last 9 months, and you'll see on the next slide actually how that correlates with the price of tin. And the price of tin is just rebounded, and we're hoping that our share price will fall. We're at about a $6 million market cap right now. So let's talk a little bit about the tin market, and it's one that is not generally well understood. Tin itself is considered the forgotten battery metal. The main use is in solder. So it's the glue that holds batteries and semiconductors together. Almost anything electrical will have some form of tin in it. And that is expected to increase. I'm sure you've heard that throughout the presentation today, with the EV transformation and the electrification of the world. The International Tin Association forecasts the demand for tin to increase about 4% for the next decade or so. What's more interesting, though, is where the supply is coming from. So 75% of the supply comes from China, Indonesia, Malaysia, Myanmar, and the DRC. Areas that all have certain challenges. Indonesia keeps threatening to hold back the export of tin. China has done that in the past. And Myanmar not producing very ethically, and they basically have been high grading what they have in alluvial production, and that their stocks are diminishing there. The price of tin, with the exception of the last, say, 2 years, has been quite low on a historical standard. So there haven't been a lot of projects that have advanced, which only plays into the forthcoming deficit in years ahead. So, what is the case of tin now? And if you look at the share price, which is, at least on my screen, is the top left, I probably should have expanded that for the year previous as well. And it was almost a perfect graph, and it peaked in March of last year at an all-time high of 50,000 per ton. And since then, it has taken a real nosedive. I guess by the end of the summer, it got down to just under 16,000 or about 16,000 per ton. The last month, though, it's had a rebound. It's up about 40% to just almost 23,000 per ton. Part of the reason for that is going back, we had the supply demand fundamentals were working in our favor and squeezing the price up. COVID had an impact, and China, which was withholding tin from the market, flooded the market because their semiconductor factories and other factories using tin were on pause because of COVID. So we've been chewing through that inventory, and now we're seeing the warehouse stocks starting to rebound, and which correlates into the price rebound as well. So our portfolio, we've got several projects, like I said, in Northeast Tasmania. Our focus or our flagship is a Great Pyramid project. It's one that has a historical resource on it of 10,000 tons at about 0.2% tin. We've been drilling on that for about 8 to 9 months. We've got a 5,500 meter program. Excuse me. We've been releasing some results, including yesterday, and I think we've released about 3,500 meters of results, and they've all been very, very positive. We are currently on our last hole right now. We're doing one deep hole, which I'll get into. At our height, we had 3 drills rolling. We're down to our last drill right now. While that's going on, we're prepping our other 2 projects. Aberfoil, which is a historic producing region, produced over 2 million tons up until the mid-'80s. So we're doing some work on that. And same with Rattler Range, which we're going to start doing a little bit of pre-drill work once the transaction closes, which hopefully will be actually later this week. So let's talk about Great Pyramid. And the first thing is its location. I was just down there 2 weeks ago. And it just reconfirmed what a good area it is to potentially be building a mine. This part of Tasmania was actually, it used to be forested. It's on forestry lots. It's still zoned for future commercial production. We were able to drive right on the top of the Great Pyramid deposit, which is essentially just a hill. There's crosscuts and roads that we were able to get our drills in without having to get any additional permits and so forth. And it's backstopped by the historical resource. So no, 10,000 tons of contained tin is not really that big. The grade for something that would be contemplated as an open pit is actually quite good. So what have we been doing? And you see a block model of the historical resource on it, and that's right from surface down to about 40 meters. And so our goal, kind of 3 different goals for the drilling campaign. One is to reconfirm the historical resource, and then check laterally and at depth. And then, the ultimate goal is to try to get this into about a 30,000 or close to a 30,000 contained tons of tin. And I'll explain why later that number is important to us. So just yesterday, we put out some drill results. And what we're excited about that is what you see right at the bottom of the screen. So traditionally, it's only been from 0 to 40 meters. This is about a 300-meter hole, and we're seeing very good mineralization at depth. So that's checking one of the goals that we have. Previous drill results, if you see the red box that's highlighted, was within the historical pit, but it's an area that hadn't had any drill holes on it. And we hit 78 meters at 0.51% tin, so that's 2.5 times above the historical grade, including 23 meters at over 1%. So we keep hitting all our goals that we were hoping from this project. I mentioned before that we're on our deepest hole right now. And what we're going for, we've identified a IP chargeability anomaly, and that's starting at about 200 meters and goes down actually below detection. So we don't know if it's tin bearing. Obviously, we hope it is. If we do hit tin, then this will be orders of magnitude bigger than what we're contemplating right now with the cap. It could just be a hunk of pyrite, in which case we still have a very good opportunity to build some value out of the cap. And so this is the last hole. We should be wrapping it up in about a week or so. And then drill times right now are taking about 6 to 8 weeks to get back. So at the end of the year, early January, we'll have all the assays back, and we'll make a decision whether to do a little bit more drilling or to update the resource. And while this is going on, we've got our other project, which is Aberfoil. And so this is only about a half-an-hour drive from Great Pyramid. It's a past producing district, 2 million tons at just under 1% tin underground. In the old days, they basically didn't do any modern exploration. They were just following these high-grade veins and didn't have much planning. So we're doing an extensive soil program there, and some map work to determine, how the extent of the known veins, and also to try to identify some other targets. So we'll have this prep to go once we are finished our operation and get out a new resource at Great Pyramid. The third project that we have is Rattler Range. As mentioned, we're just closing that up this week. It's a little earlier stage, but it's we're quite excited about it. It's got 47 tin occurrences across a 12-kilometer mineralized trend. So again, we're doing some map work and soil sampling programs, so that we'll have this one prepped as well. We've got a few projects, and so we can't do everything at our stage with the amount of cash that we have, but we certainly have enough cash to get Great Pyramid to where we need it to be to update the resource. So we like Tasmania for a number of reasons. We talked about the ESG angle on it. It's a state that produces tin currently. Metals X has one of the largest mines in the world. It's over on the west side. They ship out of a port to the north, which is actually probably closer to our property than to theirs. The fact that the areas that we're in is zoned for future commercial production is certainly a bonus when you're putting the lens on that, can this be built? And the backstop to this is that Tasmania is undergoing a bit of an effort to repatriate people from the mainland and grow their industry. So they've been very supportive in all of our activities. So yeah, pretty simple next steps. Finish off the drilling, get those results in, update the resource, and then move towards feasibility. We'll make a decision at that point whether to just focus on Great Pyramid or start doing some drilling work on our other projects that we have. So, part of the story here is the Inventa Capital Group. So we are backed by Inventa Capital. It's founded by Mike Connert, who's one of our directors, and also Craig Perry, who's one of our advisors. So they, especially Craig is well known to the market. He was one of the founders of ISO Energy and is currently chairman of Skeena Resources and Visa Silver. He was a founding director of NextGen as well. So he has a history of taking smaller stage companies such as ours and growing them extensively. And in the case of a couple of those companies, into the billions of dollars of market cap, and certainly 100 million on a few of the other ones. My background, I've been in this industry a long time. Before joining the Inventa Capital Group and being involved in a few of their companies, I was corporate development for Western Copper and Gold, which owns a very large copper gold asset up in the Yukon. Last thing I did was help bring in a strategic investment from Rio Tinto on that before joining this group. I'm based in Vancouver, as most of the team is, but we do have a team in Australia led by Russell Fulton, who's lived there his whole life. So we have good experience on the ground as well. And just circling back to the opportunity here. So, we certainly have the tin fundamentals are exactly what you would hope for in any kind of, material. We've been beat up on our share price. We've been, the tin price has been beat up, but it looks like it's turned a corner. So my goal in the short term here, and we'll know in the next kind of 3 to 6 months, is can I take this 10,000, contained tons and get it into the 30,000 range? Our grade is better than adequate. We just got to get the size up. And so far with all the drilling, and all indications are that we'll get to that level. And that level is, there's a very good comp for that. If you look at the Taronga project, it's a project that sold about 18 months ago for $35 million. And it was about 30,000 tons at 0.17, I believe it was at. So, $35 million is not huge, but when you're starting at a market cap of 6 million, that's 5 times where we're at today. So I think there's a pretty compelling case that we're going to be building value and are undervalued where we stand right now. So yeah, just in summary here, we're in the right jurisdiction. More and more people are looking for clean supply of critical metals. We've got a team that is able to execute on the plans and has a history of creating shareholder value. Our strategy is very, very simple: is to acquire these past producing or deposits that have previous resource on it, advancing them up to a stage where we can start developing them. And then the timing is right for the reasons that we mentioned below or above, sorry. But I would say the main feature is what I see as a re-rate that we should get once we put out our new resource in the new year. So with that, I thank you for your time.
Chris, thanks for that great overview of TinOne. Why don't we jump to a few questions? I mean, certainly one of the first ones I have is my own. And, you did touch on that a little bit near the beginning, but tin is obviously, a very old metal, something that's been known for probably thousands of years. But it's not one of the first metals that people think of when they consider the green transition. So maybe you can just elaborate a little bit on the importance of that in the green transition.
Yeah, I mean, it's where are we at here? I mean, the main use and what's driving it is in solder. So it's as mentioned, the glue that holds the semiconductors together, and any kind of electrification on it has tin usage, and of course that's expected to grow. Another takeaway on that is in an iPhone, I think there's like 4 cents of tin. So if the price of tin goes up 3 times, it's not going to have a material impact on these various uses. Whereas, some of the other metals that are much more expensive, you get to a point where it gets too expensive and they substitute in or out. So it's and then the thing underlying that is there's just been a lack of investment into this space, and it's comparable to the setup for copper, which everybody understands. The difference is the tin market is extremely small. You don't get the BHPs of the world building 50-year mines. You get companies such as ours and smaller producers relative to these copper guys who get kind of 10-year mines, 15-year mines going. So you need a new supply of projects out there. And yeah, I mean, it makes for it's probably the most volatile, or as volatile as any of the metals. And it's not really the demand that's changing, it's the supply. And for those reasons that I talked about, the countries where the supply comes from, it's generally policy decisions that are making it swing. Indonesia decides to export, and then they shut it off for their own use. We saw that with China. One very interesting thing that we want to watch for this year is what's happening in semiconductors with US and China. They basically have banned any kind of importation of semiconductors. Well, in turn, China has kind of said, okay, well, we won't provide you with tin. So that might be part of the reason for the uptick now, but it'll be interesting to see how that plays out over the next year or so.
Okay. You did touch on this, but again, be interesting if you could elaborate a little bit more on some of the places where most of the tin is mined globally and what kinds of challenges that brings.
Yeah, I mean, so China, we just talked about that. Indonesia has been threatening to not export it because they want to feed their own smelters within the country. Myanmar is interesting. So they, are alluvial miners. So they're basically placer mining, and which is not exactly environmentally friendly. They're going into these streams, very high grade, but they're kind of chewing through that right now. So they're running out of new supply. But certainly that over the last 5 years has been part of the reason which held the price down. And then of course there's just different political realities, I'll say in the DRC and Myanmar as well. So that instability, often affects the supply.
So yeah, so that clearly speaks to some of the supply risks in the market. I see that. Actually, I'll get to this a little bit later. But what's the exploration environment like in Tasmania, Australia in general? I mean, yeah. So I'll let you speak to that. The potential, I guess.
Yeah, I mean, it's we started assembling these projects about 4 or 5 years ago when, we kind of saw the way that the battery revolution was going, but tin was still out of favor. So it wasn't until it went on its run, we kept this as a private company, and that we decided to list it. We didn't see the collapse over the last 9 months. But we see the long-term trend, which is very positive. So we were able to get these projects very, very inexpensively, and are advancing them. So my experience, first of all, Australia is different in different jurisdictions. They operate at different speeds. Tasmania is not known for being fast. It's kind of a lifestyle place, but there are workers that are there. We've got one of the best exploration managers, been there his whole life, so we've been able to get drills and teams working for us. It's easy access in the area that we're in. There are some challenges on the western side of Tasmania, but where we're at, it's zoned for future commercial production. We're not near a town, with the exception of Aberfoil, which had a small town that was founded from the tin mine, back, in the early 1900s. So in terms of a place to operate, it's about as good as you get. I drove up there, and you're 10 minutes on a gravel road to access, and you can get right on top of the deposit. You don't need permits to use existing logging roads. So we were able to drag our drills around and with ease and get to all the sites that we wanted to. So and then the last thing, which I think I mentioned, was that it's Tasmania itself is trying to re-attract a lot of workers that had moved to the mainland, and you're starting to see that happen because it's so expensive in the Melbourne and the Sydneys of the world. But part of the issue for them coming back was there's not as much industry going on in Tasmania. They'd relied on tourism for a long time, and so that's changing. They've been very supportive. But keep in mind, mining is still their number one driver of their economy.
So, I mean, again, I'm not going to make any assumptions. I'll let you speak to it. But what is, given the history of mining there, what does that say about infrastructure, access to the kinds of resources you need to explore and eventually develop, the acceptance of mining in that area?
Yeah. Yeah, so it's certainly accepted. I mean, with the case of Aberfoil, all the infrastructure is there, minus the mill, which is, it's long gone, but power, and there's a little city there, and all the roads. So I mean, you can drive right up to it. It's about as good as you can get for that. Great Pyramid's a little more remote, but there's water nearby. There's power not too far by, and then ultimately you have to ship out of somewhere, and it's about an hour and a half, 2 hour drive to the port.
Oh, that sounds quite doable. What is the potential upside for growth at each of the projects? Can you speak to that a little?
Yeah, probably too early to tell on the Aberfoil and Rattler Range. Great Pyramid, I can't really speculate much more, but what I can say is that we're trying to get to that 30,000 ton range. I mean, we've got a couple million in the bank, and I can get it to that with the cash we have. At some point, you got to get to the next stage. But the comparison that I showed with Taronga, you would have, in theory, you have a value of about 35 million. The projects are very, very similar in terms of how they look and how the infrastructure that's there or not there. So, that's my immediate goal, is to get it into that range. And then hopefully get a re-rate, and we can be a little more flexible to expand on our other projects.
I have an interesting question from one of the attendees who's asking, how is tin securing itself to be used for batteries instead of other solder metals? And are there partnerships in place that would potentially make you a preferred supplier?
Yeah, so a couple of things on that. I mean, the main factor in the growth of tin for solder was that previously, they used lead, and UK banned that in the 80s, and so then tin became the preferred use. Could there be other substitutes? Yeah, it was silver, but as mentioned, tin is the cheapest component to all these batteries and electrical formations, right? So that it plays into our favor on that. Are we a preferred supplier? Yeah, I mean, you hear the Teslas of the world talking about getting clean supply and of critical metals, and the reality is there are very few primary tin producers in, we'll call them, good jurisdictions. In North America, there aren't any. You get some in Europe, UK, and then obviously some down in Australia as well. So, I have a partnership quite yet? No, I don't have that. We're part of the, what's interesting, actually, the International Tin Association. If you're interested in all the stats, they've got great research on that. But we're one of 10. We joined, and we were one of 10 Explorer developers. I mean, that's it. So if there is an uptick in, funds want to start getting, battery metal funds want to start getting into the space, or people want to start having some exposure to tin, it won't take much to move the market. And just to expand on that, I think the whole tin market only trades about $1 million a day. And you compare that to gold or copper, I mean, it's such a fraction. So, we're hoping for a little uptick, and we saw that 9 months ago when the tin price went up, and companies certainly benefited in terms of their share price when that happened.
Good. So Chris, we've really got just a minute left. I'd like to wrap it up, but I'd like to just give you the opportunity to tell investors what kind of catalysts they might be able to look forward to over the next months.
Yeah, so I mean, we put out results yesterday. We're going to have probably a couple more sets of results between now and early January. So you don't have to wait long. So far, everyone has been better than we could have expected. If we hit that deep hole, that'll be a major catalyst. And then, of course, we'll move towards updating the resource early in the new year as well. So we'll know in 3 to 6 months if we have enough to update the resource and get in kind of that certainly 20 but to 30,000 range, and at that point we should get a re-rate.
Well, thanks for this fantastic overview of TinOne, and as well as the tin market. I'm sure that most of us here have learned a lot about this market and the potential. And with that, I guess we're pretty much ready to wrap up not only TinOne's presentation, but the entire conference for the day. I'm going to pass the mic on to Arlen Hansen.
Hey, thanks so much, guys.